What's up everyone, Brad here with the Money Dad channel. In this video I want to talk about the overall stock market, what I'm seeing, because it was a very weird day. We were down pretty big for the entire day until pretty close to the end. We started to come back. The S&P 500, the big indexes really came back to that flat line area. The small caps were down on the day about 0.75%. So I want to go over kind of what I see on the charts here and what I think is going to happen going forward. So this is not a video about any particular stock like I usually do. I just want to get my general thoughts on the stock market out there because there is some uncertainty. We're starting to see a little bit of fear creep in. A lot of people are talking about how frothy the market is. We've been going up forever and we just can't sustain a run like that where there's going to be a pullback, there's going to be a crash. I keep hearing this over and over. So let's start with the candlesticks for today. Zooming in on what happened today, we can see this is our green candlestick today, right? So when you see these tails on these candlesticks at the bottom, that is bullish. That means that the price action on the day came all the way down to this range, but ended up coming back and closing all the way up here, actually. So even though the S&P 500 closed basically flat, it was considered a win, I would say, for the bulls, because we were all the way down here at one point. I mean, we were down about 1% on the S&P 500 at one point and climbed all the way back. So that is the story here. We closed out the day ending up much higher than we got at one point in the day, and that's pretty bullish going forward. If you look at candlesticks and even just what happened recently, look at these long tails on the bottoms of these candlesticks right here, and what happened the next day? We trended up, and it doesn't happen every single time, but a wick on the bottom or a tail on the bottom of the candlestick suggests that there's a higher probability that we are going to continue higher the next day. Okay, so that is the candlestick for the day on the S&P 500. The Dow Jones US completion total stock market, so not the Dow Jones, not the 30 stocks in the Dow Jones, but the total stock market. This is like 5,000 stocks. This is the candlestick for this index, like all 5,000 stocks in the United States stock market, right? So look at this candlestick, huge tail, right? Came all the way back and closed all the way up here. That is a very good sign. Look when we pull back, these little pullbacks right here, look what happens at the bottom of these pullbacks. You have tails on the bottoms of the candles, right? That is a bullish sign. That indicates there could be a reversal. It doesn't happen every time, like I've been saying, but it is a good sign, okay? Now let's look at these small caps. Look what we have here, a giant tail on the bottom of this candlestick. Not saying we're definitely going up tomorrow, but looking for the positives here. This is the bullish case for the stock market going forward. Another bullish case that I have for the stock market going forward is the RSI indicator. And you might be saying, dude, the RSI indicator is super overbought. What are you talking about? Well, look at the RSI indicator for the small caps and the completion index and the S&P 500. Look, we are super overbought on this RSI, but look at the RSI in the past throughout this whole run up. It stays overbought for long periods of time, and then it dips for a little bit into oversold territory, right? Stays overbought for a long time. It can sustain longer periods in that overbought territory than it likes to sustain in oversold, right? I mean, look how long this run was in overbought territory. Then we chopped around for a long time, and now we're just getting back into overbought territory. I'm not saying we're definitely going to go up and stay up here, but we have a history on these charts of being able to sustain an overbought status for a longer period of time than normal. And it's the same case on the completion index, where you have long periods of being overbought, right? Look how long this period is right here. Look at this giant period right here. We do get a little bit oversold right there, but generally, I mean, these are very long periods of time where the stock market stayed overbought. And we just entered overbought territory like 9 days ago at the time of this recording. So we haven't been up there for very long. We could definitely stay there a lot longer than this. Let's look at the small caps. Look how long these periods of overbought territory are, right? You're talking about a month right here, This is probably pretty close to, that's about 3 weeks. I mean, we've only been overbought for a week or 10 days. We can definitely stay overbought for long periods of time. Okay. So for those out there that are saying, you know, we're extremely overbought on the RSI indicator, yes, that is true. But there is a history of being able to stay overbought for longer periods of time. So I am not worried as much about the RSI indicator. And even if we do have to sell off to bring this RSI indicator back down a little bit, these sell-offs have been very shallow and very quick compared to the bull run, right? We ran up from the lows of October to this high here at the end of December. I mean, that was 2 straight months of going almost straight up. And then we had, what, a week of sideways to downward action and then just right back up again. I mean, these pullbacks have been very short. They've been bought up very quickly, and they do not pull back very deep at all. So if you're getting worried, if your money is in the stock market and you're worried that we're going to crash, that would be going against the trend, right? We have not had a crash since March of 2020 when the pandemic hit the States. That was the last crash. That was almost a year ago now, and we've gone pretty much straight up since then. And you know how I like to say on my channel, guys, the trend is your friend. Stick with the momentum until it's not momentum anymore, until it's not the trend anymore, right? So I would not bet against a bull run right now. I would not bet against the stock market. The Fed is still pumping money into this stock market, elevating prices. I am not betting against the Fed. Not while they're printing money, not while they are pumping money into the market, that is for sure. And while we have these little pullbacks, Bitcoin seems to be doing very well. So if you are looking for an alternate method of investing your money or trading your money, Bitcoin has just been going through the roof lately. I did have a price prediction on Bitcoin that played out. I never made a video on hitting that price target. I still need to make it, but we did hit my price target there of $49,800. We blew past it actually. So looking really good for Bitcoin, and the stocks that are invested in Bitcoin, or you know, they're Bitcoin mining companies, they have something to do with Bitcoin, they have been doing extremely well lately. On a day where almost every stock was red, we had the Bitcoin mining companies Riot up 30%, Mara up 10%, CleanSpark up 4%, and it was up a lot higher at one point, I believe. Actually, it put in a super huge tail on CleanSpark. Look at that one right there, big old tail. So I do have a price prediction out on CleanSpark. Actually, it looks like we hit the bottom of that support for this wedge perfectly today, and it looks like we could be bouncing up and heading to that price target of $70. So have to keep an eye on that. Overall, guys, I think the stock market is fine. It is overbought, but there is a precedent set that it can stay overbought for long periods of time, and that's okay. Because the Fed is pumping money into this market. So I am not taking my money out. I might trim some profits off of some of my positions and keep them in cash looking for the next trade, but I am not making any direct moves to lessen my exposure to the stock market because I think it's going to go down. That's not the case. I'm trimming profits off of trades to look for the next trade and have cash to put into the next trade. So I think that we still have more gains to be had in this market. And if we do chop sideways, that's not the end of the world. We can still trade sideways action. You can still make money in a sideways market or even a down market by trading, right? I do have my long-term investment account, I have my retirement account, and I have my trading account, and I plan on making money in my trading account even if we do see some lower prices in the near-term future in this market. I don't expect prices to go too low, but if we do, I do expect to trade through it. I mean, we can look at some of the resistance levels under this market. They are pretty robust, I would say. Look, we have 4 candlesticks right here, boom, 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 all that touched this resistance line. So I would consider that a very strong floor for the S&P 500. And right now it looks like that floor is around that 37.50 range, but it is a rising floor. So I mean, that's 200 points lower from here. That's a big move down, but I don't see us coming anywhere close to that. That would be a pretty big pullback. I would be pretty surprised if we pulled back that far. We don't get that big of a pullback very often. I mean, the last time we had that big of a pullback was back in October. We had this one right here at the end of January, and it was only for a couple of days, guys, and then we just went right back up. There is a similar floor on the completion index. I think it's around right here, right? Yep, that looks good right there. So nice little floor we've got set up right there. And then on the small cap, the Russell 2000, the floor is pretty steep on this one, so not much of a pullback left for that support. So it's looking pretty good for the small caps. This support is really steep. So if we do pull back, it would not be much further. It would be maybe in like that 215 area, and we're currently sitting at 223. So that's only, what is that, $8 on a $200 chart. That's only 4% downside, guys. That's not much at all for a pullback. So especially when you consider the upside potential, 4% to the downside is no big deal. I mean, we'll make that back in a couple of days, just like we have been every single time there's been a pullback. I'm not saying that's definitely going to happen. Of course, I can't predict the future, but you look at the trend and you assume that the trend is going to continue until it doesn't. It's that easy. The trend is your friend, guys, right? That's what we say on this channel. So that's all I have for this video. I wanted to do something a little bit different today just because, you know, it was a pretty choppy day. It was a down day, and I know a lot of people out there are kind of worried about their money, wondering if we were going to crash. So wanted to kind of bring some positivity here. I'm not saying that we're definitely going to the moon tomorrow, anything like that, but I do see some bullish signs. I think we're going to be fine. I don't know that there's going to be a crash anytime soon. I would be surprised if there was a crash. So I say, you know, stick it out, guys. That's what I'm doing. That's the easy way to do it too, right? If you try to time this market with your long-term investing account, you are almost always going to perform worse than if you just left it in, and, you know, buy and hold. Just keep investing every month until you hit retirement. That is the tried and true method. You know, you just keep investing through crashes and you end up making 12% a year for 30, 40 years. And you do very well. If you try to time the market, you take your money out, you never end up getting back in. I have experience in this. I took my money out thinking there was going to be a crash, and I waited and waited, and 2 years go by, and the stock market has gone up 60%, and I missed all of those gains, and a crash never came, and I was kicking myself. I mean, I've been there. So, you know, the easy way to play the stock market is to just let your money ride. If the market crashes while your money is in, guess what? Just buy more. Do not sell. When you sell at the bottom of a market, that's how you lose even more money, because you just lost 20-30% from that crash, and then you sold at the bottom, and then it started coming back up, and you missed out on all those gains. The easiest way to do this is to just stick it out through a crash. If a crash ever comes, don't take your money out. Leave it in. Keep investing more. Buy more stock when the prices are lower. Buy the dip. That's the easy way to do it. Even though I don't see a crash coming, that's how I would play the crash. Stick it out. Okay, guys? That's what I got for this video. I hope you enjoyed it. If you did, hit that like button. If you're not a subscriber yet, hit the subscribe button. Leave a comment down below. I've got links to all kinds of stuff in the description if you guys are looking for books on investing. If you want to learn how to read stock charts, how to analyze candlesticks, I got links down below in the description to all that stuff. Basically, if you click any of the links in my description, it helps me out, my channel, my family a lot. So I do appreciate all that stuff that you guys are doing here with me on the channel. Okay, guys, I'll see y'all in the comments down below and in the next video. Thanks.